What's going on, everybody? We are on episode 2 of Wolf Talk. Thank you, everyone who tuned into episode 1. I know it was a little not geared to a topic, but thank you for following through and watching it all. We appreciate you. I am your host, Mr. Banks, along with No Risk, No Premium. How's it going, Chris?
What's up, brother? How we doing?
Pretty good. I think we have a really good episode today. It's going to be on what type of traders there are. And we're going to go over each one so that you can figure out what type of trader you are so that you can have the success you want in your trading and investing career.
Let's do it.
Cool. Let's just get right into it. I think there are 3 different types of traders. I'd go with day trading, swing trading, and investing. Would you agree, Chris?
Yeah, 100%.
Cool.
Keep it
Yeah.
simple.
Yeah, no, keep it simple. You don't want to overcomplicate it, adding too many,
Mm-mm.
subcategories to it.
Yep. Which one do you want to hit first?
Let's go day trading. Actually, let's just go through all 3 first,
Okay.
about like what they are so people understand. When
Okay.
you're a day trader, day trading is just that. It's pretty much holding a position for less than 24 hours. So
Mhm.
you're in a position and out of a position within a day. This can
Typically
also
before the market closes. Yeah. Your cash
exactly
position. Yep. Or possible overnight. But that would lead us to the what? Next one, swing.
swing trading. Yeah,
Yeah.
exactly. Yeah, so swing trading is like holding something overnight or longer than a day. I'd say up until less than a year mark.
Yeah.
So yeah, it goes from a longer than a day, holding a trade for a couple days up until the year mark. And I think at the year mark is when you become an investor because you're holding for the long term.
Yep. Which also happens to be that capital gains from short term to long term. Right. And all investors typically want to take advantage of that long term capital gains. But we'll get into that. We'll get into
Absolutely.
that, right?
Absolutely.
Uh,
Yeah, let's start with day trading because we know that's probably the hottest topic. That's what everybody wants to be. That's what they see. They see all the gains and see all this, glory to day trading.
mhm.
But let's be realistic. Let's go over the pros and cons of day trading. What would you say is a pro to day trading?
Oh God, a pro to day trading is the opportunity to make very fast profits rapidly.
Yeah,
Meaning, you're able to make a good sum of money with a large return rather quickly. However, I'd say the biggest downside to trading is it is the most emotionally draining and easily the hardest to do consistently.
absolutely.
As much as you can make those rapid gains very quickly, you could also make rapid losses even faster. And
Oh,
that's what
absolutely.
one thing people they don't realize that's what there's equal risk to equal reward on that day trader, man. Like it's shoot. And especially in the market conditions that we're in right now, it's to me, we talk about all the time. It's a smash and grab environment. It's in and out.
Hmm.
You're not overstaying your welcome. You don't rob the bank and stick around to see if the cops show up.
Absolutely.
And that's it's the hardest thing in my opinion to do. Um, I don't know. Would you agree?
I agree. Yeah, and I
Yeah.
think I think it's definitely like over glorified for sure,
Hmm.
because you do see these big gains, but you don't see the big losses that come from the high risk profile that you have of day trading. Like you
Yep.
said, there is the big gains, but everything has its yang to its yin. So the con to it would be you can lose a lot of money
Yeah.
quickly,
Hmm.
quickly.
Yeah.
Yeah,
Like
so yeah, I would agree with you with the pro that it is something that you can get more quick money to. I think it is something that is beneficial if you can learn it and control your emotions
mhm,
to any kind of portfolio. Now, granted, you're not going to be full porting or using a major part of your portfolio to day trade, but it is
exactly.
something as you're sitting in a swing trade or you're investing into something long term, you can use part of your portfolio, small amount, I would say 10% or less,
Yeah,
um,
definitely.
to day trade, get some quick gains that you then put into your swing trades or your long term investments.
Exactly. I would say the biggest the biggest reward to day trading is making a lot of money.
Hmm.
Unfortunately, the sustainability of continually making a ton of money is not going to make you wealthy. It'll make you rich,
Yeah.
right? The swing trading and the investing. right? When you're putting your actual rapid dollars, the quick dollars that you make trading, and you put those into long-term assets, whether it's precious metal, real estate, stocks, dividends, whatever. That's what, and that's so much stress for so much more stress free too. That's a buy and hold type situation where you're really not stressing. You don't have to sleep at night.
Well, and it's
But yeah.
awesome. Yeah, I mean, absolutely. And then with the swing trading, you can, yeah, like you said, it's more stress free versus the day trading where
Mhm.
you have to make sure you're at the computer. As people who work jobs or can't be at their computer or in front of the screen all day, just day trading isn't for you. If you
Exactly.
can devote, like, say if you do work, because we do have somebody in the group or a lot of people in the group actually that do work 9 to 5s or full-time
Hmm.
jobs,
Yep.
but they have that devotion of the first 2 hours of the market where they're at the screen and that's what they trade and then they're done for the
Yep.
day.
Yep.
So
Yep.
definitely you need to have that time where you're in front of the screen while your day trade is going on.
1000%. Yeah, you have to be able to watch every single tick, meaning every time that stock moves up or down, you have to be able to watch it. Day trading, you cannot just click buy. I'm going to go take a piss, grab some coffee, make some breakfast, I'll come
Yeah.
back to it. That's no, that ain't it.
Nope.
Or like, a lot of people, like you said, they work. So, we've got a ton of people working 9 to 5s and salute them, but they definitely know that if they're at work, like they have to know, like, all right, my calendar is cleared. I don't have a meeting. I'm not going to take a phone call. No one's going to walk into my office at these times, whatever, et cetera, et cetera. So they know they can devote specified amount of time to that trade, and they know that they can get in and out in a specified time. I think we could use a good example of Dylan.
Yeah.
Dylan's one of our members, full time teacher.
Runs a
So
nonprofit.
runs a nonprofit on the side. He is in I'll say the West Coast. I don't want to say the state. He's on the West Coast, so he's on Pacific Standard Time. So the market opens here at 6:30 a.m. and he doesn't start teaching. I think I think he's a high school teacher, so or middle school or high school. So the first bell is 7:30, whatever. So
Yeah.
he has one whole hour to get his trading in done for the day. 1 hour. That's it. And he knows that, right?
Mhm.
And he knows that. So he knows once that the bell rings, he's done. He's out. He has to log off his computer. He's got kids coming into class, whatever it might be. So he only trades. So there's some mornings where he's like, "Fuck, there was no setup. There was no opportunity for me to get into a trade. So I don't trade, and I'm done. I don't make money that day, as far as in the stock market is concerned." So there is. I would say between the three, this is what will lead me to this last point: is day trading takes the most discipline like as a person.
Yeah.
You have to have massive emotional discipline to be a very successful day trader, because day trading is the most emotional thing you could possibly do for work. I mean, you work with your money, and typically it's large amounts that you can lose at a second. Like it takes a moment's notice. It takes one bad headline, and you could be
Yeah.
literally having to go look for a job again, right?
Yeah.
Or so from a standpoint of being disciplined, having a strategy set, planning your trade, trading your plan, you know, the day trading is the most disciplined, and this makes it the most like difficult. So,
Absolutely. I
you
mean, I think
know,
that's, with day trading, you have to have your strategy down.
mm,
With the swing trading or investing, you do have that room because you're buying time essentially. You're sitting on it. But with day trading, your strategy has to be on point and you have to keep with it and, not deter from that strategy.
yep,
And like you said, keep discipline and just stay on it.
yep,
So
no,
if you're not disciplined, if you don't have a strategy, a consistent winning strategy, then day trading probably isn't for you. Or if I mean, I love day trading and I love for people to get into day trading. I don't want to deter people and like
hmm,
say that it's just a bad thing because day trading is one of the best things to add to your portfolio. But don't go into day trading thinking this is what's going to make you wealthy or this is what's
mm-mm,
going to make you rich.
no,
You see a lot
exactly,
of things on, on social media. There's a lot of, paper trading is rampant, rampant. So, you see a lot of things that are false. You see these big dreams that people are trying to sell you, and I'm just going to tell you straight up right now, that's not real. It's not.
Mm-mm.
Like, you can ask anybody who's wealthy, like, they don't, like, day trading isn't what made them wealthy. They
Yeah,
might have
yeah,
made some good money from day trading, but without money management or going into a longer term investment style
yeah.
portfolio, you're going to lose that money.
Yep. Like,
And,
it's not what you make, is it's not how much money you make, it's what you do with it.
mhm,
Right. And so that's how I think we could even pivot into the swing and long term investing, because the swing trading and long term investing, from a principle and discipline standpoint, are almost identical.
yeah,
Um, the only difference is the duration of how long you hold the asset or the position. um,
mhm,
and you know what I mean. Like, those, if you're swing trading something that could take you from a $10,000 position, it could take you to $50,000, and you did it in 6 months, right?
yeah,
Or you take a long term investment in like a Microsoft, Google, Apple, Nvidia, one of these like blue chip big tech stocks that are going to be around forever. If you can buy them at a bottom and keep on adding to your portfolio, or just buying like ETFs like the
cost
QQQ or
averaging in.
SPY, and you just keep on buying dips and buying dips and buying dips, and then you have a Roth IRA, you have a whatever long term portfolio. Those are the things that compound
Mhm,
10% year over year over year over year. That's what gets you to the point where you don't have to, you're not actively, like, your portfolio is so massive. And if you have a dividend portfolio, or you start taking that money and dumping it into real estate, a real estate is really just a long position in
mhm,
the real estate market. I mean, people don't realize that.
absolutely.
Like, you buy a house, and, like, dude, houses, like, the housing prices can come down. They can. But, if you just look at a chart year over year over year, I mean, typically you just see it like this, just like the stock market, like the S&P 500, or some, ETF or index. So, it's just a buy and hold for a long, long, long time. And the best thing about that is real estate is typically going to always appreciate in the long term, because why? We live in a finite earth. We are going
Mhm.
to run out of space. So,
Yeah, we
if
are.
knowing that you have a finite good, I mean, you have a finite supply of something, and there's always going to be unlimited demand for it. That's just going to raise that price up. So, anyway, yeah, that's my long story, long-winded answer. But pivoting it into the long-term thing, I think truly it's your day trading profit should definitely be going into Roth IRA, dividend account, real estate, any other, like, if you can become an angel investor and get in on the ground floor of different companies, which they made a public to people, to people that aren't accredited investors a few years ago. Like, I myself got in and am invested in a few things. So, like, there's these vehicles that you can get your money into to just park it for a while, and then you could take advantage of the long-term capital gains rate, which is 20% flat, no matter what.
Yeah, I
Whether you
think it
make
starts at 10% from the,
it makes its way,
so
the
it's
max would be
10%.
20, right?
Yeah.
So if you make 100, like, a million, 200K in taxes. But if you make a million, it'd be 500K in taxes if it's active income, and active income is less than a year of a hold, right? That's short-term capital gains. That's what you don't want. Day trading is all short-term capital gains. You know what I
Well,
mean? So
and
you're
then
also going to be paying the most.
a lot of people, they don't think about this, but the wash sale rule,
Hmm.
and so you hear a lot of people are like, oh, I'm day trading, and then they just keep trading, 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 and if the year comes, they lost all their money, they blew their account, but then they owe all this money in taxes. So that's
Yeah.
another thing you got to think about when you're day trading. And the wash sale rule, what it is if you buy a security, sell for a loss, and buy the same security or a related one. So that's a big thing. People think it's only buying the same ticker, but it's actually this anything that's related within the same industry or theme of that ticker will count towards the wash sale rule too. So what
Yeah.
this means is if you were to take a loss on a ticker and then you came back before the 30 days is up and you bought it again, you cannot count that loss on your taxes. So
Yep.
there's people that just keep day trading all the time and they're like, oh, I took a loss here, but then they'll go buy back into that ticker,
Hmm.
within that 30 days, the same day, the next day, and then take a loss again. But it's that now you're screwed double time because you can't take both losses.
So I'll give an example for the listeners. So, like, basically what Justin's saying is, let's say you took, let's just say you buy SPY outright, right?
Hmm.
Whatever. And you put 10,000 in, and you made 10,000, right? and then you try to trade it another way, and then you lost 20,000, so you're back to zero, right? Because you had 10, you made 10, you're at
Mhm.
20, then you lost 20, right? You blew your fucking load. Well, you're gonna owe the taxes on all of on the capital gains that you made. You're still gonna owe the taxes on that 10%, but you basically have zero taxes, right? Or yeah, I'm sorry, you have zero profits now. Like you're back to zero. So let's
Absolutely.
say you're like, okay, I'm gonna put 5,000 back in, and then you run that up to 20. Okay, well, you're still going to be 20, like from 5,000 to 20, the second round at 15, and you still have the first round of
The
gains
10.
from 10 to
Mhm.
20. So you're actually at 25. So you're going to
Mhm.
have to pay tax on the whole thing. Basically, the wash doesn't allow you to offset the losses from the gains, and that'll lead us into the next one is, what's an advantage, what a lot of people don't know is you need to change your account, and you have to turn it in. It's a few forms. You turn it in with your tax return. Typically, that's how they like it, to elect mark to market. Justin, do you want to just explain the mark to market real quick?
Yeah. So market to market means you're exempt from the wash sale rule. But what you have
Mm,
to do to elect that, obviously, there's no particular rule in place from the IRS that states you have to trade this many times or this many times. There is a case out there that they kind of base it off of, but essentially they want you to be trading at least 4 times a day. And within those 4 times a day, they want you to be making 4 trades. Now, it doesn't mean you're going to buy in and sell out. That means that you can scale out 4 times within
yeah,
that date, and those count.
yeah,
But what the biggest thing is, you can't go, it's not retroactive. So if you want to elect for this, then you need to elect for it next year by the
Uh,
tax cutoff date, which would be like April 15th. So if you
April
want to,
15th. Yeah,
yeah, so if you want to elect M to M or full-time, trader tax status, you have to elect by April 15th of this year so that you can become exempt from the wash sale rule. And the reason it's like that is because they're considering you a business. That's what your full income is. So they're not going to, hurt you with the wash sale rule versus, somebody who's just trying to make money or being a retail trader. That's where they
mm,
get you. So
yep,
there is a pro to day trading. If you can get elected with that, then you could save yourself from the wash sale rule. So that's another thing that a lot of people don't talk about. So we have the wash sale rule, and then we also have that market to market election that can make you exempt.
yep,
But be careful because the IRS ultimately makes the decision, and they can come back at you and say, no, you're not a trader. We're not going to count you as a trader. And then now your wash sale rule,
yeah.
you're
So
screwed.
if it's four because they want you to trade 4 days, 4 trades a day, and there's 250 trading days. So it's basically like they want you to have 1,000 trades for the year. To
Yeah,
them,
like
that's
700
pretty much.
plus is the
Yeah,
is the goal rule.
it's
Yeah,
like it's showing them that, like, okay, you're not just fucking around. You're not saying like, oh, this is what I do. It's like,
yeah.
no, it's like you're actually in and out of trades. And they know with trading at such volume, like Curry doesn't make every three.
Hmm.
You're gonna miss a couple. You're gonna miss a couple trades. I mean, it's just what happens. So they
Absolutely.
understand that. They're not gonna penalize you for it. So that's the cool part. So if you guys didn't know that, check it out. Maybe we can post the articles that they might need, like in the comment or in the description, from the IRS. There's a
Oh,
few
that'd be
different
cool. We could do
articles.
that.
Yeah, just so anyone that is trading, or maybe they're just getting into trading, is something good for you to look into to see if you can qualify. Maybe you have taken a loss. We've all taken a loss before, so it wouldn't even hurt to just see if you could try. But
Yeah, and I just want to make the point that you have to when you make the election, you'll be making it for this year's taxes. So when you file taxes next year for 2022, that's
yeah,
the election you'll be making. You can't go back and say,
for 2021,
yeah, for 2021 and elect
yeah,
for last year. So I'm sorry if you do have major wash sale rule and you can't
like, yeah,
claim it. There's no you're screwed. There's no way around it. But
you're fucked.
you
Sorry
can
about it.
prepare. Yeah, you're pretty much fucked. But you can prepare for next year. So keep that in mind. We will drop some links for you guys to some more links to understand that. But yeah,
Yep.
and that's another thing. The wash sale rule, but with swing trading, more so than not, you usually are in a trade longer than 30 days. So you're not going to go out and then buy back in
Hmm.
if it is a loss, and you're swing trading it. So usually, even if you are red, you'll cost average down and you'll wait until that turns green. and then
Yep.
finally take profits there.
Yep.
Um, so
I
yeah, I
mean,
mean, I think definitely there's a lot more pros with swing trading. If you work a 9 to 5, again, you're not going to be able to sit in front of the screen. This allows you to hold on to a position in a longer time frame, so you don't have to constantly be checking it every day. And if you are taking a swing, don't fucking check it every day. It's a fucking swing, and that's
yeah,
what it's
that's the
for.
other thing. Yep, 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 yep. You should, if you watch every tick of every day and you're not day trading, like, there's so many long-term investors and people that are holding something for, let's say, a swing. They knew they're going to hold it for 10 months. I mean, maybe they don't have a duration on it. Maybe they are planning on investing and just holding it forever.
Yeah.
But you get such good gains up front that technically you take the profits, and it was technically a swing trade.
Hmm.
That's where those two kind of get. They can be used simultaneously.
Hmm.
It could be a planned swing turned into an investment. Like, fuck it.
Or a
You know.
planned swing turned into a day trade because it just pops off
Yeah.
on some news. You're up
Yeah.
20%, and you're like, okay, I'm going to take some profits.
I've had it where I bought, like, I've been like, just recently I was like short the market, and I bought, like, some time on my contract. So I knew I was gonna hold for a few days, but then the same day it went 100% like return. So I'm like, day trade, like, sell. I'm like, I'm
Yeah.
out. Fuck it. I was planning on holding it, but I guess not. Like, I'm gonna take the money when it's right in front of me. But
And so, I think you're going to bring up the PDT rule with the day trading. I think we can go into that from there, because what happens if you are trying to swing trade, but it just keeps popping off? It's a hot
yeah.
market. Um, so PDT, what is that?
PDT is the pattern day trading rule. It's basically a rule set by the Securities and Exchange Commissions, I'm pretty sure, to the brokerages, saying if somebody has under $25,000 in their trading account and they are on margin, they are limited to 3 day trades a day. I'm sorry, 3 day trades in a 5 day rolling period. Is that what it is?
It is. Yep.
5 day rolling period.
Hmm.
So
So
let's
three trades a week, essentially.
so
Yeah.
basically 3 trades a week. Now, if you blow your load and hit all 3 of those motherfucking trades on Monday, and Tuesday comes and you buy something on Tuesday, you cannot sell it until Wednesday. Okay?
Hmm.
Meaning you have to wait for the market to close and open for it to not count as a day trade. The day trade is a buy and sell of the same security in one day.
Hmm.
Okay, in the same day. So the PDT keeps you, basically what they're trying to allow it to do is to keep you from becoming a new trader, because a lot of new traders have under that threshold,
Which is 25,000,
which
correct?
is 25. Yep. And
Hmm.
they try to keep you from doing too much. Okay, but in
Yeah.
turn, it usually ends up fucking the trader, because, they make a couple of trades in the day and then they buy something and it pops off and they don't have a day trade left. So they have to wait overnight. Well, overnight, so many things can go wrong. So many
Hmm.
different headlines can hit. The market could just retrace. It could go against you. And then you wake up to a red position. And typically at that point, you sell for a loss,
I mean, yeah,
which ends
especially
up
because you
fucking.
went into that trade as a day trade. So it's,
Yeah,
yeah.
as a trade. So now one thing that a lot of people don't know, which is really interesting to me, is every broker allows for you, except Robinhood. First off, fuck Robinhood.
Yeah.
But if you can, like, I know Webull and I know Thinkorswim, which is a TD Ameritrade product. I know you can do a cash account. I'm pretty sure, like Schwab and Fidelity, I'm pretty sure you can do it with them too.
Hmm.
But a cash account, guys, is basically you're not trading on margin. Margin is you're able to use somebody else's money to have a larger position if you want to. So when you have a cash account, you're just using your cash. You have unlimited day trades, unlimited, like, as long as you have funds in your account.
Exactly.
We always tell everyone, if you're under, my personal rule is under 50. If you're under 50K, you should be in a cash account. Because I see a lot of people get in trouble when let's say they take an account from 1,000 to 10,000. We've seen it a lot. And then, to do that again and go from 10 to 20 is very possible. The moment you get over 25, you're like, fuck, I'm going to be on margin. Like, I can do a way bigger position. They
Kind of
size
get
up,
cocky.
they
You're
get
like, I just
cocky.
came up,
And if
yep.
you go one penny underneath 25,000, I mean 24,999.99 one, it clicks back on. It's
Hmm.
automatic. It's right back
Yep.
there. And then you could get fucked right then and there. So I say get to 50. And if you get to 50 from a small number, you've pretty much solidified a strategy that you're doing, and you're doing okay. And you should really try to push it to 6 figures. And then at that point, I think you're pretty safe to be up But the biggest thing is they see the PDT get cleared, and then they instantly go against like their sizing, like their
Mhm.
size strategy or the rules that they set. Normally they're doing $500 positions, $1,000 positions. Now they put like fucking 5,000, 10,000 on real quick. They average down. They're now $15,000 in, and it's just there. It's a recipe for disaster. So I always say do a cash account. All you do like TD Ameritrade, call them up, call the representative. This is my account. I want to switch to a cash account. It's on margin. They go, cool. Give us 24 hours. Literally, next day you wake up, cash account. Now, if you have, it depends. If you have certain positions open and stuff like that, it could take a little longer. So just be cognizant of that. Any new trader looking to sign up, just sign up for a cash account. Don't even apply
Yeah.
for margin. Don't even apply for margin. It's not. It's not worth it.
Yeah, so we said unlimited day trades, but what happens is, yeah, it's settled funds. So when you make the trade, you have to wait until your fund's settled. And right
Correct.
now it's T plus 2 days, but they are putting in a law or new rule that they'll make it just a 1 day settlement period.
Yeah.
So hopefully soon that happens, and then um, it kind of will turn into more of like a margin account at that point without the
Yeah.
PDT rule.
Which I think they should do.
Yeah.
I don't know why they haven't done that. And I know it's different if you're trading like common shares. So like if you're actually just trading a stock outright, right? You could trade like
Hmm.
common shares. That's the T plus two. With me personally, I have multiple accounts with TOS. So I've had cash accounts, and the cash accounts typically trading just options has allowed me to settle. Like, let's say I get in and out of a trade, today.
Yep.
Tomorrow morning when the market opens, I got all my funds are settled already, and I can get in right into a trade. I can't speak for like Webull and Fidelity and all the other ones, but I know with TD Ameritrade, that's how that works. So something I think just noteworthy is to know that the options settle typically the same overnight versus the T plus two commons versus common shares. But to be honest, man, it's your fucking money. It should settle that next day. I mean, I don't know what the
Yeah.
holdup is. Like, you know,
I
I
think I
think,
think it's just so that they can it goes back to the PDT rule. So it's like so people can't get around it at this point. It keeps that like you have to
well,
wait
I know
essentially.
people that are like, oh, they'll trade on margin. Like, let's say they're like, they got $1,000. They put $1,000 in TD and they're on margin. And then they go open Webull and put $1,000 on Webull. And then they go open Fidelity, put $1,000. And
Mhm.
they're like, well, now you've got 9 day trades for the week. And I'm like,
Yeah.
oh God, oh
Yeah.
God, this will end
Yeah.
well. This will end well. Typically, it doesn't end well.
Not.
That's why I said that. Yeah, it doesn't end well. But all in all, Justin, you can recap it. The three different types. The day trading is most stressful, but you can make a ton. And
Can
then,
make a ton, you can lose a ton.
yeah,
Swing trading, I think, is the most common. And I think what people should strive to become
hmm
is swing traders. It is, I mean, personally, I think it's a lot easier to understand and learn and form a strategy with because, like I said, you are buying time and it's the setups, you're pretty much buying bottoms and just letting them run up.
you're
And then when
buying
you
things
get,
that are oversold and just letting
mhm.
them get bought up, and they're typically good stocks that are going to be around. So, it's
Yeah,
kind
you're
of
not
like,
buying these momentum plays that have knifed, 80% and like, oh, I'm gonna buy it now. Now you're
yeah,
buying like when Apple's down, Square's down under $100,
like
stuff like that.
PayPal,
PayPal.
Alibaba, like in those
Hmm.
Chinese names. Okay, I get it, but like some of these names that have bottomed out that are
China.
still good companies, you know. So, and then, swing trading and long term investing are almost the same thing. It's just the duration of the hold. And I still think, you know,
I think
kind of,
everybody, I think, swing trading is also another thing where there is more risk to it than investing essentially,
mm,
because you are
yeah,
in a position, a shorter amount of time. But
I
with
think it's a little more
investing,
speculative too. I
yeah.
think you're swinging like kind of more speculative stocks too. The long term investing is the ETFs, blue
Hmm.
chips,
The drip, the dividend.
the
And I mean, there's
the
nothing
big stuff.
wrong.
Yeah.
Yeah, because I mean, a lot of people want the get rich quick overnight, which isn't real. But when you invest into the long term, um, you see the results. Like I pulled up here, Warren Buffett in 2018 made 3.8 billion dollars just from dividends, just from dividends. So I mean
Crazy.
there's things. I mean, you guys, everybody wants everything now. They want everything now. But when you think about, the future, that's what we need to start thinking about.
Yeah.
And 100%, everybody can become an investor. You can put $100 into that ETF in the SPY, IWM, QQQ,
Yeah.
whatever ETF you really like,
VOO. I mean, all of them. Yeah. Yeah.
and it compounds. I mean, it's the proof is there that it compounds exponentially.
I mean,
Um,
it's 8 to 12% year over year for
yeah,
fucking 50 years. You know what I mean? So I'm like, you
since
know,
since the market's been around, since SPY has been around, yeah, it's
yeah.
averaged the average return is 10% a year. So
Mhm.
even with its up and down and crashes and everything, it's 10% a year average return. So
If
I
you
think that's
look
some,
on the long term chart, right?
yeah,
Like it's just steadily like, where am I? Right here. It's
yeah,
just steadily made its way up, right? But if you look on those short day trading time frames, the shorter time frames, that shit's fucking
all over the
that
place.
causes the stress. But if you look long term, it's just making its way up. So I think long term investing, whether and let's say you make a job where you make, like, we're on a call today with you know, uh,
Josh.
someone we know, and he was like, "Man, he's like, I make good money. I make good money. Like doing this. He's over a quarter million a year. Loves his job, but he's not a trader. He's like, I don't want to be a trader. I don't try to be a trader. I
Hmm.
know that I'm good at swinging. I'm good at investing, and that's what I'm going to do. And okay, that's good. You don't Day trading sounds sexy. Investing doesn't sound sexy. No
Yeah.
one's like, oh, Warren Buffett, like, God, hubba hubba. They're like,
Oh yeah, like reads
but
financial
they
reports and
think of like
everything.
they think of like this day trader, like, in New York, like on the stock exchange, or in Chicago, and they're like in the badass suit, and like, all this, like, it's not that
Remote
cool.
pass.
I promise it's not that cool. I'm
Yeah,
wearing a
you're in the
t-shirt
high
and a
rise.
fucking I'm wearing a t-shirt and a hat right now, and I couldn't be happier. I'm a fucking trader. It's not that cool, I promise.
No, it's
Uh,
stressful. It's honestly the most stressful. I mean, have you guys seen my journey? A lot of day trading. I started swing trading. That's how I learned swing trading investing. I think that's how
yeah,
everybody should start. And then I got into the
100%.
day trading because we got huge bull market. So of course it's kind of hard to lose money with day trading when everything's just constantly right. I mean, it's easy to
Yeah,
lose money, and I'll take that back. Easy to lose money when you're day
it's
trading.
easy. It's just easy to lose
But
money.
I was day trading a lot, and now this market's up and down. There's a lot of fluff. It'll be up one day, news hits, it's down the next day. Granted, we had this bull run, which is why you see me. I got back in the day trading again, but the swing trading really is where it's at. I
Yep.
built my money from swing trading. So you guys see, if you guys were with me from the beginning when I started my career on Twitter, everything was a swing trade. I went from swing trade to swing trade to swing trade, and that's how I build most of my money. And
That's
so,
how Justin found me, because he saw me day trading. He's
yeah,
like, "Fuck, I'll leave that shit to the birds. Chris can have that. He could
yeah,
take that stress out of my
absolutely,
life, bro." But now it's
yeah,
good because I've learned so much from Justin on the swinging and the investing side, and I'm sure he's learned a lot from me, and it's made my journey, being able to transfer some of those profits into the long term stuff a lot easier too. So it's good to have a mix of both. You should,
yeah.
in
Yeah, I
my
think
opinion.
day trading should be the smallest amount of your portfolio used. Swing trading should be. I think swing trading should be like that good medium, and probably your investments should be your biggest allocation of where your money
100%.
is going.
100% agree completely.
Hmm.
100%. If you've got, I mean, some people got $1 million portfolio. Um, you're not going to go put 200 grand on a trade. Okay. You're probably not going to put 100 grand on a trade either. But if you really like a stock to go long, you could put 100 grand on an investment,
Yeah,
right?
absolutely, and sit.
Like,
Well, this
it,
is
like,
what I like. I like to always say this, like whether it's 100 grand or 10 grand, or even $1,000. Say you're putting it on a swing or you're investing it. Say even over a month's time, you hit 20% at $1,000. That's 200 in the month. It's not really too big, but you have a small account, so that's fine. If you're at
mhm.
$10,000, that's 2 grand a month. So you're
Yeah.
sitting that's stress free, sitting in a swing for 30 around, say roughly 30 days, and you made $2,000 versus sitting at your computer hitting buy, sell, buy, sell, buy, sell. And usually you'll probably be down to 5,000 instead of getting to 12.
Yeah.
So I think that's another thing that people need to look at is like, yeah, it's boring. Yeah, you're sitting there. But if you do have big money and you're throwing in 100 grand into a trade, you don't want to do that in a day trade to try to double it. You can
Mm,
go throw it in a long-term investment, sit on it, put it in a swing trade. In a couple of months, you're up 20%,
yeah.
40%. Now you're at 40 grand where, you're waking up, you're eating breakfast, you're going about your day. You're not even sitting, staring at the computer. So that's
Yep.
another
Yep.
thing
Yep.
people need to, get into their heads that like, there's money. There's the biggest money is made swing trading and investing, like
100%.
period.
I think one last we could probably end with this one too. I want to take it back to the Warren Buffett comment on
Yeah.
the dividends. So people don't realize the dividend income. Justin mentioned he made what was it 500? What was it? Five
He
billion? What
made 3.8 billion in
3.8 billion.
2018.
So typically a great dividend portfolio will yield like 10%,
Great
right?
one.
But
Yeah. 8%. Yeah. 6 to 8
yeah,
is
great.
like the
I mean,
average.
I would call Warren Buffett a great investor.
Oh, yeah.
So I'll say let's keep numbers easy at 10. So if he's getting 3 bill a year in just dividends, that means he has a dividend portfolio of assets that are paying his 3 billion of 30 billion. Okay. Well, like all it takes, like a lot of people like their goal is to retire with $1 million, right? That's what
Hmm.
everyone wants to like that's like been the
Yeah.
norm. Well, if you could get to $1 million on a dividend portfolio and you're making 80 to 100 grand, well, let me tell you something. That's long-term capital gains. And typically on the dividend portfolio, it's even better. You're not taxed on the first,
Over 80 grand.
is it 80?
I think it's
It's
over 80
80.
grand. You're not
Yeah.
taxed. Yeah.
So imagine having 80 take home. That's like 110,000 active, but it's all passive. So there's no
Hmm.
taxes. You're taking it home. And guess what? You still own the $1 million in assets
Yeah.
that are paying you. And that's every fucking year. You
And think
want to
about the
talk about how the
compound of
rich
that.
do shit? Dude, they do shit because they don't got to wake up and work a fucking job. Every month they're going to get a goddamn paycheck into their brokerage account, and they could go out and go shopping on a Tuesday afternoon at 1 p.m. while everybody's
Hmm.
sweating their dick off in a suit and tie, right? In an office chair, like an office chair. Like people don't realize that. And the rich don't spend their active income on money. They spend, or I'm sorry, they don't spend their active income on like bullshit, like
Yeah.
shopping and cars and all this bullshit and watches, whatever. They spend passive dollars that fund the toys, right? So
Hmm.
the only way you could get to that lifestyle, the jets, the Rolls Royce, the
The
fucking their
Lambo.
Lambo, $30,000 Rolex, all this bullshit. Rich people go broke by buying these things with
Hmm.
active income. Wealthy people use their passive income to buy the toys. They still own the assets that are fucking hundreds of millions of dollars. And you don't pay taxes on passive income nearly as much as you pay it on active income.
Absolutely.
Our tax system was set up for that way. So take
Hmm.
advantage of it, right?
All right, Chris. Yeah, I just want to ask you one more question about, let's just to end it on what type of person is suited for each. So as a day trader, as a person, I would say like the psychology behind it.
Okay.
What type of person are you? Are you high risk taker? Are you emotional? Like what type of person do you need to be a successful day trader? And then we'll go through swing trading and investing next.
Okay. I think we could start with what we hit before was you have to have time, right? So
Hmm.
you like be real with yourself and your job. If you work from home and you got the time to do all three, perfect.
Yeah.
But if you know, like, I'm at work, I'm on sales calls, all that bullshit, then day trading definitely isn't for you. Okay. But if you have the time to do it, and let's say you do it full, let's say you have a great portfolio and you can live off it. You don't have to work actively right now. And you cannot be a gambler because you will
Hmm.
not last long. Okay. Market is calculated risk, right? Everything is calculated risk. So as a day trader, the most successful day traders are in my opinion, are the ones that make trading emotionless and boring as fuck.
Yeah.
I make that analogy in our chat. And I'm fucking around, but like I'm just like, hey, make trading boring again, and ha ha ha. Okay, you make the most money when your plan is no emotions tied behind it. You're never sized too big. You're always sticking right to your strategy. You have you've planned your trade, and now you're just trading your plan, and you just click buy and sell, and you leave it stress free. If you make it as stress free as possible, you can only do that by being the most disciplined person ever. Okay. So
Cool.
I
So
would
this,
say
yeah,
yeah, consistent. The discipline
consistent.
leads to the consistent profits, which leads you from not having a portfolio that's up and down. And like I was 10 grand yesterday and I lost 4 grand today and I made 1 grand yesterday and now I'm down two
Yeah,
today. And then I'm at 12. It's like, okay, you went from 4 grand to 40, but it took you a month and it was like you were at 40 in the 10 days and then you were down to 20. And then,
yeah.
so I would say the most disciplined person has to be. You cannot just be a gambler. Like we saw the bull run of 2020, and we saw these fucking first time brokerage account openers and the hodlers and the YOLOers and the meme stocks and the this and the that. And that was cute, but they're all gone now.
Yeah.
They're all gone because they had zero risk tolerance, like definition, and they had no consistency. They had no discipline in anything they did, and they got wiped. And now they're gone, and now they're back to work.
Yeah.
So to
So
be a,
pretty
to be a
much,
trader, you have to be very, very disciplined, and you have to be disciplined in all aspects of your life. Trading will open your eyes to a lot of your emotional shortcomings, like your emotional
mhm,
intelligence shortcomings, for sure. It'll
yeah.
just it's like the world's best therapist. It'll expose you for who you really are. Okay.
No,
If
that's
you're a
true.
greedy fucker, you're going to be exposed as being, if you're a huge risk taker, then it's going to expose you. So, to me, I would say you have to have the ultimate strategy of discipline tailored to yourself.
Yeah.
You
To
know
your
what I mean?
risk, yeah, profile. Absolutely.
Everything has to be tailored to yourself. And because your portfolio, your trades, your entry, like Justin, everything you do,
Hmm.
it's not what I do. And
Absolutely.
it's probably not what's best for me. Right. Like if you make 10 grand one day, I make 2 grand one day, and my goal is to make 2 grand, then I make 2 grand. You can't care about what anyone else does too. That's the other thing.
Yeah. It's
Stay
your
off
own
of social
journey.
media and stop fucking. It's like trying to compare your dick size to somebody else. It doesn't
Yeah.
fucking matter. It doesn't
Yeah.
matter. Stop. You have no control over anything. You have no control over their bank account. You have no control over their life. No control over what they say. So just worry about you. Just worry about everything you do in your life, and then worry about growing your account, and you'll be better off. Stop worrying about everybody else.
Dropping heat right now.
Yeah. Okay.
No, yeah, no, that's good. That's good. And it's definitely true because you see that a lot. People are always trying to, compare themselves to somebody else, but no account is the same. No
Nope.
person is the same. No situation is the same. You have no
Mm-hmm.
idea what this person is trading for.
Mm-hmm.
You don't have no idea what their portfolio size is, et cetera, et cetera. So yeah, definitely always focus on your journey and
Yeah,
no one
one person could
else's.
be, we talk about a lot like, there could be one dude that's just trying to make this month's rent payment. He's trying to keep the
Yeah.
electricity on. He might have $1,000 left to his name and all he needs is $100 profit. So he just needs 10%.
Yeah.
That's it. He needs $100
Hmm.
versus maybe there's someone like you or like me where, we might be taking 10% of a $30,000 position or even
Exactly.
10% of a $10,000 position, right? And that's because that's
Hmm.
all we wanted. Or we had $1,000 position and we were really looking for a larger gain. We wanted 100%, 200, 300, 600, whatever. The kind of percent gains that we've seen. You always have to do what's best for your account.
Yeah.
Always best for you have to be the only time you can be greedy is taking profits.
Yeah.
We talk about that.
Yeah.
You can never go broke taking profits. I don't know who said that, but it's like a famous, like, I don't know,
Confucius.
phrase I've heard. Yeah, Confucius says you must take profit. Yeah.
Yeah.
Always take your profit. Yeah.
No,
Um,
yeah. So yeah, as a day trader, just recap real quick. So you need to be mentally strong and disciplined. You need to
mm,
have a solid strategy that works,
mm.
and then you can't be emotional.
Has to be
Eh,
your strategy.
Yeah, your strategy.
Someone else's strategy isn't your strategy. You can
Hmm.
adopt it. You
Yeah,
can adopt it. But if you think you're just gonna get into a like come into our community or there's thousands of other ones. If you think you're just gonna take someone's call outs over and over and over and over and not actually learn, right? You're not gonna make it.
it's not it.
Not gonna make it. That ain't it. That ain't it. Anyway,
So
go
and
ahead.
then yeah, now you're good. So then day trader, yeah, discipline,
Mhm.
strategy has to be solid, non-emotional, and just stick to what you know.
Yep. Make trading
And not a
boring again.
gambler. Yeah.
Make
So as a
trading
swing,
boring
so
again.
what type of person would be a swing trader? You would say,
Somebody that has enough time to be cognizant of like micro and macroeconomics as far as the climate of the market to understand, you got to be familiar with, okay, maybe we've got the Fed chair speaking, Jerome Powell speaking this day. We've got CPI data these days, right? These are things that can short term within the year can actually affect, the temperature, the climate of the market in that time. So you need to be cognizant of those things, but you also need to have knowledge of the companies that you are going to want to swing trade, and understand the risk that's involved. Whether you're, maybe it's a there's a high short interest on a stock, so you're just playing like a short squeeze on it, and you know it might happen, so you're gonna buy and hold it for 3, 6, 9 months, whatever. Maybe there's a stock that's pending, like the bio. I would say those biotechs are like good
Mm,
swings, and when you're
yeah.
like pending FDA approval,
Yep.
there's gonna be big news coming, right? Or you're just buying like good cheap stocks, like small cap stocks that you can swing that are not as expensive. So think about like a Lucid, a Neo, some of those like SPAC stocks that like were in 2020s, but like DraftKings, right? These stocks that are typically probably going to be around for a while, but they're not the Apples, Microsofts, all those. I would say you have to have knowledge. You have to have that type of knowledge.
Okay.
Um, but and then have some technical analysis and knowing, hey, where is this a short term or definite bottom on the chart, to know you want to scoop up, these to actually buy and hold, to swing it.
Okay. So
So
yeah.
the
So you still
long
have
way
to.
to answer, yeah, the long way to answer is you still need to be pretty knowledgeable about just the micro and macro aspects of the market, because you have to have some day trading technicals like strategies, but just the patience to hold, to buy it and
Mm,
turn off your fucking computer and just forget about it, or maybe set your limit order for whatever, buy the stock at 5 and you're like it's going to go to 10, so you set fucking half your limit order at 10,
would you
whatever.
say you need to be more disciplined to be a swing trader than a day trader, or it's kind of roughly the same? Would you say?
It's the same.
Yeah.
The discipline is there. Maybe the aspects of like the characteristics of discipline, like
Mm,
you have to have a discipline to exit your position in a day trade and not be greedy. Where in a swing trade, sometimes you have to have the discipline to be patient, to
yeah.
let your position play out and get to the sell, right? To let the whole entire plan, the trade plan, work itself out.
Yeah.
So
I'm just gonna bounce off of that
yeah,
just real quick. Yeah. I mean, because you see a lot of people in swing trades and they're up, 10 or 20%, and they don't actually take out their full position or take full profit. And you're like, well, what are you
mhm.
doing? And it's
Yeah. What
because
do you?
you're
Um,
being patient until you hit your price targets that you have set out on your technical analysis. So, because you know that you're swinging this, like for 6, 9 months. So, yeah, maybe
mhm.
it does pop up 10, 20%. But from the technical analysis or whatever, the fundamentals of the company, that it has potential to reach this price target. So,
Yeah,
whereas, a day trader, you're taking profits, you're out, you're moving on. I don't care what happens. Whereas swing trading, you got to have, even if you are green, have that patience to get to that price target
yeah.
that you're looking for.
Patience is a discipline too, because our society is all about the instant gratification and just the quick hit. How can I get rich quick? Except the quick money, et cetera, et cetera. It's like that's not it. That's definitely not swing trading. But there is an aspect where you definitely want to take the profits. Day trading is kind of the opposite. Sometimes you see a big gain very quickly, and you think it could go higher, and now
Yeah.
you're getting now you're being greedy as fuck. You just robbed the bank. Now you're sticking around to see if the cop showed up. Like, who the fuck does that?
Yeah.
You know what I'm saying? Like, get in and get out. That's day trading. Swing trading is definitely the patience to hold. And then, I mean, to transition to long term investing, I mean, like, bro, you just think in 30 years, will I be upset if I did not buy this now?
Yeah.
Like, I think
Yeah.
about that. Like in 30 years is the opportunity cost. Like, Josh, we had the webinar, bro. He crushed it. He crushed it. And he mentions like, dude, the opportunity cost that comes along with, if you don't take this investment now, how much will it actually cost you in the long term? So you have to think like that.
Absolutely.
So like, dude, like when Apple hit like what 108, like right at like what, it got so low. It went from 10 or 118. It was so low, whatever, almost 100.
Yeah.
And it got up to its height at 180-ish, 178, something like that, whatever, off the top of my head. I mean, dude, and did that in like 12 to 18 months. Like, bro, that is a 70% increase in that short amount of time. Now imagine in 25 years from now. Apple's still going to be on the iPhone 700, and like we're still going to be using AirPods, and you're still going to have Apple Music, and like they're going to come out with the next inventions. It's going to be there. So what if the stock's now at 500? What if
Yeah.
it splits again and you
Right.
don't even care? What if you had Tesla at 200 pre-split? Like, you know what I'm saying? Like, so that long
Mm-hmm.
term, I think anyone could be a long term. And
100%.
I would say you should.
Everyone
I don't.
should be a long term.
Everyone should have long term. I don't harp on like financial advisors at all. I harp on bad ones,
Yeah.
but I think from a lot like that also helps you if you have a money manager to manage the majority of your long-term investment so that it's in good hands, the right decisions are going to be made, and then maybe you also have a percentage or a portion of your money that you can manage yourself,
Yeah.
and you can add to that. But yeah, I think it's good for everyone, especially if you're like, I don't have any market knowledge. It would take me a while to get up to speed, or I just don't really I just don't want to become that knowledgeable. And that's okay.
Yeah.
It's not, you don't have no one.
Yeah.
I mean, I would say you and I encourage that heavily. I
Mm-hmm.
encourage you to be, financially literate, especially with the stock market. But if
Absolutely.
that's for you or whatever, then yeah, like my parents, dude, they're both teachers. They don't have an individual brokerage account like them personally. They've got a money manager. He's a good guy. I've met him. I known him since I was a kid. Good guy. And you know what? Like they luckily that they work for damn near 40 years each. So, their retirement is decent. And
Yeah.
it's because they just allowed their money to get taken out of their paycheck and get sent, and it put in the right hands of somebody that made sure that the money worked for them and everything. So I'll never hate on a financial advisor. Just bad ones,
Yeah.
just bad ones. That's all.
No, that's
Um,
good. I mean, I think we've covered everything. I hope this, helped you guys look more deeper into, what type of trader you can be or what type of trader you even want to be, because
mhm.
there is risk involved, different types of risk involved with each one, that we covered. So
Yeah,
I hope you
no,
guys enjoyed
definitely,
everything
no, definitely, bro.
today.
I think that's it. That was good. We
Yeah.
got to hit all three. And do you want to mention the video quality on your
Yeah,
end?
man. I'm sorry. I'm sorry, guys. My video quality isn't that good right now. We're trying to get it figured out.
Yeah,
It's New Mexico, so we don't.
yeah,
They don't have that good of internet, but yeah. If you guys like this, you guys like us. We want you guys to go out there, spread the message. We're trying to get financial literacy to everyone out there. So
yeah.
tell your friends, tell your mom, tell your dad.
Yep, yep, yep.
You
If you
know.
learn, I'll ask this, and I'm gonna
Mhm.
steal this from Andy Frisella. He's somebody that I listen to religiously for many years now. He talks about a fee on his podcast. His podcast called Real AF. If you want to listen to it, I heavily encourage. Uh, he's the number one entrepreneur like podcast and current event person. He's like a Joe Rogan. Okay, but look, he has this thing. He calls it the fee. He goes, the fee is this. He's not going to run ads. He's not going to sell you anything. He's not going to do anything like that. He just asks if you get one piece of good information, if it made you think differently, if it made you laugh, if you enjoyed yourself on it, you just tell one person per episode.
Yeah.
Hey, listen, I just learned about the 3 different types of day trading from these two random ass guys on the internet wearing all black. And you know what? I think it's good stuff. I'm going to tell my brother, hey, I think you should check this out. That's it.
Yeah.
It's not taxing. You're not paying nothing. But if that's all we ask, I would say. So if you want to pay it forward for us, that would be massive. Our
Yep.
goal obviously is to spread financial literacy to everybody, and the masses, because we think it's lacking majorly right now.
Massively.
Yeah,
Yeah.
massively lacking in our country. So we appreciate every single one of you. Like, comment, subscribe, pay the
Yep.
fee forward. Jay Banks, you want the last word, bro?
Um, Wolves are out. That's all I got. See ya.
Peace.